Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Simon King of Octopus Ventures to talk about the Octopus Future Generations VCT. Simon, welcome back to the studio. We're here today to talk about the Octopus Future Generations VCT. Firstly, what is it? What makes it different? And why should investors consider investing in it?
Well, thanks for having me back again, Jonathan. The Future Generations VCT is a venture capital trust fund that was created in 2022 and is managed by the Octopus Ventures team. And it was created with the belief that some of the best returns for investors are going to come from entrepreneurs and companies that are solving some of the world's biggest challenges. And as a result, the Octopus Future Generations VCT invests in early stage, high growth potential companies, but only if they fall into one of the three themes that the Future Gen VCT invests in. And they are empowering people, building a sustainable planet, and revitalizing healthcare.
And so taking a step back, Octopus Ventures, for those who aren't familiar, who's Octopus and what's your role there?
Yeah, of course. So Octopus is a fund manager, started in 2000, so nearly 25 years old now. And we manage a range of different products and have about 13 billion under management in terms of the assets that we manage. We're part of the wider group of Octopus companies, which includes Octopus Energy, and the different investment areas that we focus on encompass renewable energy, property, and smaller companies. And really, that's where the Octopus Ventures team focuses. So we are a team of more than 70 people who are focused on investing in early stage, high growth potential companies. So I've been with the team for the last 12 years. I actually joined as an academic, so from academia. So I got a background in physics and then materials chemistry and semiconductors. And I've joined the team 12 years ago to focus on companies that are really accelerating new technologies and sciences into the commercial world.
And you mentioned some of the themes that the VCT invests in there. Could you give us a little bit more of an idea of the types of companies you're backing within those themes?
Yeah, of course.
How large are they? Are they revenue generating?
Yeah, so we back companies from very early stages. Typically, we're not the earliest investor in these companies. So prior to our investment, companies will have received money from friends and family and sometimes angels, but often we're the first institutional investor into these companies. And so typically that means they're anywhere between 5 and 30 people. Sometimes they're revenue generating, but not always. They're almost certainly loss making at the point that we're investing, and they're looking for capital to help fund their operations and for them to kind of scale and grow their products and services. Within the three themes that we focus on, so that's revitalizing healthcare, empowering people, and building a sustainable planet, we're looking for companies in revitalizing healthcare, for example, that are trying to improve access to healthcare, either by making it easier to access through online services or by making it cheaper. Or it might be discovering new cures for diseases. In empowering people, we're looking at companies that might be democratizing access to educational or financial services, or really improving people's productivity through new tools and services that they can use. And then in building a sustainable planet, we're looking at companies that are, perhaps building new energy sources or helping facilitate the transition to net zero.
So do you have any examples of companies you've backed?
Yeah, of course. Over the last 6 to 12 months, we've backed a range of very exciting companies. So one that draws to mind is a business called Drift. And that's a business where we led their £4.7 million seed round just recently. And what they're trying to do is build and develop a range of high-tech sailing vessels that will go out and harvest offshore wind and convert that into energy on board these boats. And so they do that by going out and autonomously sailing the trade winds and then capturing the wind energy, converting seawater into hydrogen, and then transporting that to ports where they can deliver it to customers. And the reason that we back that business is partly because it's a really exciting opportunity. Nobody's tried to tackle this problem before. And there are lots of synergies and benefits of having a product and a vessel that can follow the winds and kind of continue to capture it, where fixed competitors have to wait for the wind to come to them. But also because you've got a platform in the boat that is harvesting the energy, converting it into hydrogen, and is the transportation mechanism for the hydrogen. There's lots of synergies, so they should be highly efficient converters of wind energy. I guess the other reason is, teams. We back teams fundamentally, and Ben, the founder of Drift, is just a phenomenal character and entrepreneur. So he built Accenture's digital and data strategy team into a 100 million plus business in Europe. So, he's been there and done it with businesses in the past, and we were very excited to back him.
Very good. Any other examples?
Yeah, another example. Drift would fall into our kind of building a sustainable planet, but maybe in one of the other themes, in revitalizing healthcare, we recently made an investment in a business called CoMind. And CoMind are using lasers to look through the skull and read blood-brain signals. So they're kind of measuring your pulse, for example, through the skull using lasers. And it's a really important signal for doctors to be able to track. They do it today, but the way that they do it is by drilling into the skull and putting a pressure sensor in and sensors in to be able to monitor those signals. It's really important if you've had traumatic head injuries. It's really important in certain surgeries. It's really important for stroke detection. It might even be important in pitch-side concussion detection, but clearly, today you can't take a drill to some of those people. No. It's very invasive. So being able to measure these signals non-invasively would be absolutely game-changing for a whole range of medical applications. So again, the product and the opportunity is absolutely stellar and massive. But coming back to the team, James Dakin, the founder and CEO of that business, is a bit of a prodigy. So he was poached out of school at 16. He hasn't been to university. He founded this company, before he was 20. He's now in his early 20s. He won a Thiel Fellowship a couple of years ago. So he's really an exceptional entrepreneur. And it's those kind of people who are tackling really big challenges that the people we want to back.
And so looking at the portfolio and some of the more established holdings, it's still a relatively new VCT. Are there any stars emerging within the existing portfolio?
Yeah.
I suppose CoMind would be one, I guess.
CoMind, we're very excited about, but there absolutely are. And as you say, it's a relatively early stage VCT. So we made our first investment in June, July of 2022. So we've only really had kind of 2.5 years worth of investing in businesses and to see those, even those early stage businesses mature. But one of the companies in the portfolio that is more mature and I'm quite excited about is a business called Skin&Me. And Skin&Me have developed a subscription pharmaceutical grade skincare service that's tailored to individuals. And so today, if you have conditions like acne, you often will have to go and see a dermatologist to get these kind of pharmaceutical grade treatments to treat your condition. There are not very many dermatologists in the country, so the waiting times are often extremely long. And what Skin&Me have done is build an online pharmacy and a platform that enables you to kind of interact with the website and the products that you get sent to be able to tailor the particular subscription that you have to your own condition and kind of adapt that over time. So it's really unique in the market. And it's a good example. So the Future Generations VCT invested at Series B in that company, so slightly later stage than we typically would look to invest. But it's one of the benefits that we have Future Generations VCT, both being managed by Octopus Ventures, where we have a 15-year track record investing in this asset class, but also co-investing with some of the other Octopus vehicles, because Skin&Me was originally a seed investment from Titan VCT. And so we were able to invest and offer the opportunity to invest for the Future Generations VCT because it was already in the portfolio and we'd been able to kind of see the progress and therefore offer an opportunity to invest in a more mature and actually phenomenally growing business. So they've now delivered millions of prescriptions to customers.
So Octopus Future Gen, if it were on its own, it's not of the size where it could back a Series B round.
No,
typically.
Exactly.
That makes sense.
Another interesting one, and I just wanted to flag it because it's very exciting. We've had our first exit this year. Business called Kobe, which is an employee benefits platform. more than 150 customers, more than 100,000 employees on their services, growing more than 100% year on year. And that business was acquired just earlier this year by another company called Pluxee. So it's a great return for the company. It's a great return for Future Generations VCT. And it validates our kind of thesis and where we're investing. So great to see.
Good, good. And you mentioned you back great teams. Do you just back great teams and let them get on with it? Or do you get involved with the companies and try and help add some value?
Yeah, it's a good question. We try and help as much as we can. Now, there are some entrepreneurs where actually, they know what they're doing, and really, we can help them as much as we try, but, they're off to the races. But one of the benefits of us having been investing in this asset class in early stage companies for the last 15 years is, we've seen where it goes wrong. We know the challenges that entrepreneurs and companies will face when they are trying to scale their businesses from 5 people to 10 people to 40 to 100 to 500. And so we can anticipate some of the challenges that they're going to face, because it may be for first-time founders, the first time that they've been through that journey. And so we are pretty active. When we make investments, we're typically taking a board seat and then helping direct the strategy of those businesses. But we've also built a kind of bank of services and sort of value add services that we can bring to those companies. So one example would be our dedicated portfolio talent team. And we know that businesses will suffer teething problems as they move from 10 people to 30 people where everyone in the business, to 100 people where it's suddenly difficult to anticipate and to know what everybody in the company is doing. And as you go through that process, you need systems and culture and values that need to be embedded and pushed into those companies. So our dedicated talent team is there to support companies, because we firmly believe if they hire the best people, incentivize them properly, they're going to get great results and outcomes. So, as a concrete example, for Skin and Me, the business I mentioned earlier, our talent team helped them find a lady called Joanna Rogers to join the board. She was the ex-VP of commercial in beauty at Boots and is now at Zalando doing new product development. And so, kind of bringing that experience and skills and expertise into those companies can often mean the difference between success and failure.
Yeah, very good. And so turning to the macro environment, it's been a tough couple of years for venture. How does the environment look now? What's the outlook for venture?
Yeah, so as you say, it's been pretty tough over the last couple of years. I think there have been 2 big challenges. So we haven't seen as many IPOs or exits. The environment for kind of exiting businesses has been quite quiet. And equally, the environment for fundraising, so for companies, fundraising has been pretty challenging, because there haven't been as many venture capital funds or venture capital trust funds out there investing in companies over the last couple of years. Actually, it hasn't been so much of an issue for Future Generations VCT, because as a relatively early stage kind of new VCT to the market, it hasn't had that many mature businesses that have needed to exit. And equally, the investments we've made have been relatively recent, so there haven't been that many companies in the portfolio that are going out looking for follow-on funding. Despite that, as I say, we have had our first exit, and there are more companies in the portfolio that are now in those discussions. But actually, in times of macroeconomic uncertainty, it's counterintuitively a very good time to be investing in early stage companies. Small businesses often tend to be much more nimble, especially when they're headed by entrepreneurs who are spotting opportunities and moving on them over a weekend, versus big incumbents where they have tens of thousands of employees and are set in a particular direction and really can't jump on opportunities as they see them. So actually, we see a lot of opportunity for investing in exciting new companies at the moment. And in particular, across the kind of 3 themes, we see the challenges there being more and more acute, right? So Building a Sustainable Planet 2023 was the hottest year on record. Now, we absolutely have to do something about climate change. In revitalising healthcare, there are now 6 million people on the waiting list for elective surgery in the UK, over a million people waiting for mental health services on the NHS in the UK. And in terms of empowering people, we've seen AI transform overnight industries that historically had been kind of manual and, you know, moving things from one place to another. Now we've got machines and AI coming in and really disrupting businesses and business models all over the place. So really exciting times, actually.
And it's still pretty risky backing early stage businesses.
Absolutely.
How risky would you say it is?
Yeah, well, I mean, the types of company that we invest in are early stages. As I say, they're not generating profits, so their destiny is not in their own hands. They're reliant on investment at the point that we engage with them in order to sustain the running costs of those businesses. And because they're early stage and tackling these new opportunities, there are companies that we invest in that will fail. So it's a high risk, but potentially high reward opportunity to invest in these companies. Now, the way that we mitigate that for investors through the VCT is by building a diverse portfolio of different companies where, yes, some of them may fail, but others are going to go on to be successful. Now, with the Future Generations VCT, because it's relatively early stages in its journey, you know, investors might have suffered from the fact that it had a kind of more concentrated and less mature portfolio and therefore was higher risk. But actually, we now have more than 35 companies in the portfolio. So we've done a really good job, I think, over the last 2.5 years of building out that diversity. And as I mentioned with Skin and Me, we have a range of diversity in terms of the stage and maturity of those companies, because we've been able to access some of the existing portfolio companies and the existing pipeline of companies that we've invested in as Octopus Ventures over the last 15 years.
And you mentioned an exit earlier. So is there a prospect that you might begin returning money to investors? What's the outlook for dividends?
So the long-term ambition is to pay a 5% of net asset value as a dividend on an annual basis. But because it's an early stage VCT, so it's only been alive for the last 2.5 years, we're not able to do so until we've seen the kind of growth in the portfolio over time. So I think the earliest that the fund would pay dividends is the end of next year, but typically you'd say 3 to 5 years from inception is when VCTs would start paying out.
Okay. And so to sum up then, Simon, for those that want to invest in a VCT this year, why should they consider the Octopus Future Generations VCT? Yeah,
so I think we're at an unprecedented point in history, actually. You know, the challenges that we see along the 3 themes that the Future Generations VCT invests in are only becoming more acute. And in response to that, we've got a burgeoning army of entrepreneurs who are spotting those opportunities and going out, starting and building companies to tackle those problems. And with the Octopus Future Generations VCT, you know, we are dead set on backing those entrepreneurs. You know, they need the capital to be able to build those businesses. Their ambition is to build multi-hundred million, if not billion-dollar companies over the next 5 to 10 years. And at Octopus Ventures, you know, we have a 15-year track record of investing in those types of entrepreneurs. We have the brand such that those entrepreneurs are seeking us out and looking for our capital. We have the experience in terms of helping those companies grow and develop, that we've built this suite of services to help them tackle the challenges they face along the way. So I think if investors are looking at investing in venture capital trust fund, the Octopus Future Generations VCT is an interesting one to look at.
Ah, very good. Simon King of Octopus Ventures, thank you very much.
Thank you, Jonathan.
If you are watching on YouTube, please press like and subscribe to the channel for more.